Hey guys, Rafi here from the End Game Investor, and today we're going to talk about China.
China.
Guess who didn't have a housing collapse in 2008? That would be
China.
guess who looks like it's having a housing collapse now. Also,
China.
as a gentle reminder, the end game investor has moved ever so gracefully and smoothly to Substack, where I have more of an opportunity to write about different topics that aren't just finance. You can subscribe there for free at endgameinvestor.substack.com. And if you want to become a paid subscriber by the end of this month, which is January 31st, then you will enter into a raffle to win a free Dirty Man safe. All paid subscribers at the Endgame Investor will enter into a free raffle. Well, not free because you're becoming a paid subscriber, but you get the point. To win a Dirty Man safe, because I got two, and I'm going to send one of them to one of you lucky people. And for those who did not win or who will not win, which is most of you, you can buy a Dirty Man safe at dirtymansafe.com and use the code ENDGAME10 at checkout for 10% off. It's a great way to support this channel and support what I do while the end game hits us all in the face. We want people like me and people like you to survive it well. So buy a Dirty Man safe and support the end game investor. You will come out better, and I will come out better, and the world will be a better place while the gates of hell open up and the end game hits us all, but for the good. And I'm still putting out my weekly biblical lessons in economics, government, and other things. You can join me on my Patreon at patreon.com/endgameinvestor, or you can become a founding member of the Substack where you get free access to the Patreon. The Patreon is very cheap. It's $3 a month. I'm not really looking to make money off it. I'm just looking to teach. This week, we're going to cover how to rebuild the monetary system after a financial collapse. And yes, there are models in the Bible about this. So join the Patreon if you're interested. Let's move on to China. We have this article from the Financial Times giving you everything about the Times financial these days. This is from the section Opinion Lex. It sounds like a supervillain, but let's see. Evergrande. Remember Evergrande? It's been that teetering. Well, teetering is actually in the title here, so let's just read the title. Evergrande is the teetering domino that can tumble its real estate peers. Evergrande is that humongous Chinese real estate developer that went bankrupt in 2021 and missed a bond payment, and then it's been teetering ever since, and now it's fallen over. So let's see what happens here. Property prices in China could take yet another hit from deconstruction of the indebted developer. The world's most indebted property developer, China Evergrande Grande Group. I'm not sure why there's an extra E there. Maybe it looks like Old English and it's very important. Built an empire once deemed too big to fail. No longer. Too big to fail is no longer too big to fail. On Monday, Hong Kong court ordered the company, once the country's largest builder by sales, to be liquidated. The effect will spread far beyond Evergrande's creditors. Now, you'll notice that as this article continues, and I'll read a few more paragraphs, that Evergrande really has nothing to liquidate because it is in China. Its assets are in China, and this court order is from Hong Kong, and China doesn't necessarily listen to Hong Kong. So there's not much to divvy up. So people have already lost all of their money. And how much have they lost? Well, we have this sense over here. Evergrande now has a market value of less than 300 million, which pales in comparison to $330 billion of liabilities. If there's $330 billion of liabilities, the people on the other end of these liabilities have lost about $330 billion, but it gets worse than that. Normally, a liquidation offers the opportunity to sell the developer's assets and repay part of its debts, but for Evergrande, the winding up process should be drawn out, leaving little for liquidators to seize, meaning no one's going to recover anything from this liquidation. There's nothing to liquidate. Creditors had low expectations, expecting a recovery rate of less than 3% even before the liquidation order, which means if you spent $1 on Evergrande, you will get 3 cents in return. And if you actually spent a paper dollar in Evergrande and you get 3 pennies, you'll be up because pennies are worth more than paper dollars, but that's a different issue. So how big are these bailouts going to have to be? Well, we have this sentence here that gives a first estimate. An estimated 1.5 million home buyers have already paid the developer equivalent to an original value of about $90 billion for unfinished homes. So first of all, those people are going to have to be bailed out, $90 billion. But from here, I want to go into something a little bit stranger that many people would consider surprising. Guess who didn't have a real estate collapse in 2008? Well, that would be China. Let's look at the graphs. Now, if we go to trading economics, which I generally trust their sources, but and their data, but who knows when it comes from China, it's probably all lies. But this is what we have. This is what I can do, and we see here that in 2007, 2008. China residential property prices were climbing and climbing and climbing. There was a little bit of a decline here of less than 1% for looks like 2000, late 2009, maybe. And then we're going back up here in 2011, and then we had a little bit of a decline here in 2012, 2013, not too bad. Prices going up again, and then there was a pretty major decline in 2014, but it wasn't anywhere near the real estate crash that we saw in the West, in the United States and Europe in 2008. I think this had to do with them shutting down Macau or making it hard for money to be laundered through that, gambling province that they have there. So they kind of shot themselves in their own foot here. I don't think this had to do much with general business cycle concerns in an Austrian sense. But after that, after they let go on crunching Macau and allowing money to be laundered through that province again, then the real estate prices started to climb again. And they did so for about 8 years until 2022, the beginning of 2022. And now you see here two consecutive, it looks 2 years so far of real estate falling prices. And this has not been equaled even in the 2014 crash, 2014, 2015 crash. So this is the most serious real estate decline in China going back to as far as we have records. Now, there's something very interesting about China. You might not know this either, but China is not participating in the rise in interest rates that is accompanying the West right now. Their interest rates, 10-year government bond, Chinese government bond yield, is at record lows, 2.5%. And beyond that, we have here the China Central Bank balance sheet. That's the People's Bank of China. Now, if we zoom in on this a little bit, you can see here, I started this chart and this is August 2008. This is the PBOC, Central Bank of China balance sheet. It was at 2 with, looks like 5 zeros, whatever that number is, in 2008, just on the eve of the financial crisis of 2008. And until 2022, it just hit 4 with 5 zeros next to it. So that's a doubling of the balance sheet from 2008 to 2022, 16 years, 2008, 14 years. Sorry about that dumb math. I can't do it. 14 years, and they only doubled their balance sheet. If we compare that to what the Fed has done, the Fed, its balance sheet was just under $1 trillion in September 2008, and now it was at, a few months ago, it was at $8 trillion. So let's just say roughly an octupling of the balance sheet. So China has been extremely conservative in terms of its monetary policy until it looks like a few months ago. So if we zoom in on this chart and we see what has happened from July to now, the number now is 456,944. In July, it looks like 410 something something something. So that looks like a half of a lot. It's basically, look, if we zoom out again, you can see how this the angle of this is going pretty fast now compared to what it's been doing since 2008, which hasn't been that much of a quantitative easing program here. So China has been actually very conservative on the money printing side of things in terms of expanding the balance sheet and expanding the monetary base, I should say. But they've been very, very liberal, very, very, what do you say, dovish when it comes to interest rates. Because if you look at interest rates here, and let's zoom out on this again, whether we're talking about long-term interest rates or short-term interest rates, in China, they're all low across the board. If we go to the 52-week China bond here, week bill, and we zoom out, you can see that they're still pretty low. It's not anywhere near like 5% that it is in the US or in Europe. It's near there. It's at 1.96%, still very, very low interest rates. So the question is, how can China print more money to bail out its housing industry when their interest rates are already at record lows? And if their interest rates are already at record lows, they can't lower them anymore without severely hurting the yuan relative to the US dollar and hurting the trade relationship between the US and China, which is already pretty diseased as it is. So there's not much room that the China monetary people, the People's Bank of China, can do to reverse this housing collapse. And it looks like they avoided a housing collapse in 2008, but they're not going to avoid one now. And of course, in China, the government tries to force people to put all their money into real estate by stealing the money from the banks and allowing them to keep it if they put it into housing, which is why you have all these ghost cities and all these inflated development projects and property managers and real estate developers in China. The reason you get ghost cities is because people are looking for housing to stuff their money into so the government doesn't steal it. And then you end up with an extremely bloated sector. And then you have great ideas like allowing the sector to keep growing with more unsecured loans by banks who will not be held responsible for giving bad loans. Check out this lovely article from Bloomberg on how this problem is going to be solved. This is great. China weighs unprecedented builder support with first ever unsecured loans. That sounds safe. This was my favorite paragraph from this one. Implementation would require regulators to exempt bankers from being held accountable for anything. For possible bad loans, it says here, given the high risks involved, the people said.
Just take what you want, Mr. White. Pay us back any time. Or don't. We don't care.
And here's a more maybe accurate measure of the amount of bailouts that are needed for this sector. If the support measures are approved, they would represent China's most forceful attempt yet to plug an estimated $446 billion shortfall in funding needed to stabilize the industry and deliver millions of unfinished homes. So it's not 90 billion, it's 446 billion, whatever it is. It's crazy. So there you have it. Given the high risks involved, the most responsible thing we can do is not hold the banks accountable for giving out loans that are highly risky. That is going to solve everything, as it always does. The answer to risky debt is even more risky debt, which is why everything is moving in a parabola towards an end game that is going to collapse very soon. But I want to show you guys one more thing that suggests that the China bubble that has been blowing up since the 1990s and didn't get hurt that much in the 2008 financial crisis and was able to skirt everything since, it might finally be on the verge of implosion, explosion, whatever implosion. It's this chart right here. Check this out. This is the Chinese Shanghai Index, the most common, maybe, index of the Chinese stock market. This is going back to 1992, before the crazy trade relationship with the United States was established sometime in around 2000, and the U.S. started to have persistent trade deficits, and then China was able to stack all those dollars in its basement, and now they have them, and they know what to do with them, and they're about to collapse. So, when this whole thing falls, China's going to be just as screwed as the U.S., and both economies are going to have to be severely restructured and quickly. It's going to lead to a lot of displacement. But anyway, this is the Shanghai Index. You see here, this is 2006 here, and this line actually extends all the way back to 1992. And we had here the beginning of a triangle. This was a parabola, a Chinese speculative bubble top, and it looks to be like 2007, early 2008, which did fall during the financial crisis. That is true, though the housing market remained relatively intact. And we met that bubble here in what was another speculative top in 2015, which was followed by another brief housing crunch, which was not as serious as what it was in the West. But anyway, we are in a clear triangle here that was tagged in, looks like 2020 and 2023. And now we've broken through it. Look at that. Look at that little candle there. It's right there. I'm pointing at it with this blue arrow, and I have 3 exclamation points, which means it's very, very important. 3 means very. So that's why I put 3. So this is a little candle from that candlestick that broke below this triangle. What happens when it breaks below this triangle that was established, I think, in 1992, you could say. I don't know, but it doesn't look good, and I don't think the Chinese can rebuild this bubble after it falls, and it's about to. And then, Japan is also involved here with the yen and all the endgame countries. Everything's going to fall together. Exactly which domino falls first doesn't really make a difference. This one looks like it's about to fall. Japan is going to fall too with the yen, and then the dollar, the euro. It's all going away, all of it. And what's going to be left at the bottom of the pyramid will be money to buy whatever assets remain after this inverted pyramid falls over. And that's when capital will be redistributed to people who have actual money. And for now, the best place to put that money is in a Dirty Man safe. Go to dirtymansafe.com and use the code NGAME10 at checkout for 10% off. I'll see you at the Endgame Investor on Substack, and I'll see you guys on this channel in a few days, probably. How do you say Endgame in Chinese? I don't know. Maybe we'll find out soon.